All right, let's have a look here. It's February 7th. We just had earnings last week and the week before that. We had Apple earnings, AMD, Amazon, all of them basically, all the big ones. Nvidia hasn't had earnings yet. That will be February 25th, so that's still two weeks out. But all the rest of them had earnings, so we can have a look and see what came out of the earnings. Apple is still too high, waiting for it to come down. It looks like about 3 weeks ago it was kind of low, but not really low enough to look at. So we'll just keep an eye on Apple. But really, there's nothing to see here. It's just too high. AMD had a big drop. I got a text about this, saying, "Hey, AMD is down." Was it like 20 or 30%? Where did it come down from? Like 270ish to 200. So I mean that's a massive drop, but it's not low enough. It's not it's not down in a favorable position to buy. So even though it was a huge drop, it's right in here where these prices haven't been unique for the last couple of weeks. So seeing it again here at 200 just isn't a unique and interesting price. We really want to look for the gap fill, where if it drops down below here, as soon as it breaks through 200, it stops tickling this 200 line and drops through. Then we want to see it down to 170 at least, and then maybe take a look at it. But something like this that we had bought last year, I don't know if that's something we can look forward to finding again. I don't know if it'll ever really drop down like this again, because this should have never happened in the first place. So if we see pricing like that down to say 150, then it's probably worth it to start acquiring some AMD. But as of right now, there's really nothing to look at. I do know that Tesla and AMD are the two big ones that I had talked about last year or the prior year. That it's the one that some people still focus on, but we already made the move with AMD. We've already made the money off of AMD, and even though it's one that we're familiar with, we still have to wait for it to drop all the way back down again if we want to go into buying it. So AMD is just too high at the moment. Amazon looked good off of its earnings. The earnings looked good year over year and quarter over quarter. The earnings came out fine in my opinion. I think it missed by 2 cents. It was supposed to be $1.97, and it came out at $1.95. But compared to last year, it's still up about 10 cents. So this quarter of January versus this quarter of January, and then quarter over quarter it grows, and year over year it continues to grow. If we look at Amazon from, what is that, 2022, where it was earning about 31 cents, 65 cents, 94 cents, and then we got into the dollar, and it was a dollar, then 98 cents, 126, 143. The numbers just continue to get bigger. So Amazon continues to get bigger, and it's pathing out this kind of trajectory year over year because its earnings continue to grow. Like, the company continues to grow at a predictable rate. And, like, what is this? Like a 20% increase and a 20% increase, and 1430. Yeah, that's like 25%. So quarter over quarter, it just continues to grow, and year over year, the company continues to grow. So when we see a big ass red candle like this, it kind of just means buy it, because these turned out like that, and this turned out like that, and this turned out like that. That the moment that Amazon dropped down to about $200, I just bought some. It was Friday, so yesterday. So on my Friday buys, I added Amazon, and if we see it, let's just draw a line here. Some kind of, like, we can get rid of that one. Just a rough, bullshit line of where do we want to buy this. And right now it's under let's call it 225. So any pricing, we just draw a line straight across. And we'll call it right there. Anything under here is realistically a good price on Amazon. So if we add Amazon to the shopping list, it's going to be anything under 225, and then we're going to be looking for a return of, call it 300. So we can get rid of this one. And if we drew this out, yeah, I mean, that looks fine. So, call it 300 for easier math, but it's 289 that we want to acquire shares down here at anything under 225, and we're going to look to sell at about 300. 225 easy math is $25 that we're looking at, like a 30 to 40% return. So, that's the outlook for Amazon is buy anything under 225, plan to sell at 300. We might see 300 sometime in like July, or if it continues its expected trajectory, at least by the end of the year we'll see Amazon 300, and we can start planning an exit there. But just acquire shares here under 225. Google, I believe, is still too high. Yeah, so Google's too high. Facebook is still down. We did have a big pop on earnings, and earnings looked good. Again, it's going to be the year-over-year and quarter-over-quarter analysis, where if we look at it and say back in 2022 to 2023, it was $2.20 earnings per share, $2.98, then $4.39, then the fives, where we got into the $5 ranges, $5.33, $4.71, $5.16, $6.03, and then we got into the $8 range, where it's $8.02, and then $6.43, $7, and then this was like $7.70, $6.60, but they had to pay some fees and taxes, I believe. So the actual $1.05 isn't accurate to what they had actually made, but that's why we started buying it here on that large dip, is because this was not an accurate reflection of how the company had done quarter over quarter. And then year over year, we're looking at $8.88 versus $8 last year, and $8 last year versus $5 the year before that. So Facebook continues to grow. Its earnings look good. Again, it's moving at a predictable and trend over its longevity over these couple of years here. What is this, 1, 2, 3 years? That there's no reason to expect Facebook to not continue this trajectory upwards at this predictable growth rate, that we're looking at about 950 on Facebook by the end of the year. So anything that we buy, call it right there, anything that we buy, we plan on selling around $950, where sometime in June it has the potential to reach $950, and then anytime after that, it also then obviously has the potential to reach $950. If it generally follows this half a deviation above trend, where if it gets to a half a deviation above, it kind of gets a little overextended and either tracks up sideways or sells off, or kind of tracks up and sells off, tracks up, peaks up here, and then sells off, that we could see something like 950 somewhere along this trajectory line, which is going to lead us somewhere in like June or July. So it has the potential to reach 950 by June or July. That is the planned exit date, is that sometime, everything we acquire through from now until June, if it's under our price target of, what was this? We're going to redraw that one too. So basically this green line, anything under this green line at like $700 today, anything under here we plan on selling for $950, and that $950 price target is attainable and reachable either June or beyond. And then sometime after June we'll look at it. But if it doesn't reach that $950 by January of next year, then $950 is no longer the price target, because this line would have continued moving upwards. And so then we would be looking at something like, call it $1,100. I won't know exactly what that number is until we get there, but that's 8-10 months down the road. So for now, we're looking at trying to attain $950 on Facebook by June or sometime after June. So everything we acquire here, plan to sell at $950. We are at $660. We've already acquired a lot of shares here, and so the average cost that we have is going to be well under 700, or a little bit below 661. I believe my average right now is like 637. But if we just do the simple math there, 10% is going to be $66, and that's going to be what, 720, and then 780, and like 840. That's 40%, and then 900 is 50%. The even easier math is that 660 and 50% is 330. 330 gets us to 990. So just plan on that somewhere between a 40 and 50% return on Facebook on everything that we acquire here. And so that's the goal for Facebook, is just continue to buy that. So now on the shopping list, we have Amazon, and then we have Facebook. Microsoft dropped down a lot as well. So I'm going to start buying Microsoft on Fridays and add this to the shopping list. Its trajectory is also, expected to just continue to grow at this predictable rate. So again, we look at the earnings and we say that year over year and quarter over quarter, they just continue to grow. Microsoft is a very strong and reliable company. So this massive drop that we have here doesn't concern me. It doesn't scare me to say what is the future of Microsoft, because the future of Microsoft has been proven for, a decade, for 20 years, that the future of Microsoft doesn't concern me at all. There was some talks about OpenAI and their spending money on the artificial intelligence, and that they're losing the race, and I kind of don't care. Like, I really don't. The specific news and the specific way that the company is navigating doesn't matter to me a whole lot, because they have a proven track record that whatever it is that they're trying to do works. And so even if they're not winning the race, or they're not doing the greatest in the AI space, it doesn't really make a difference to me, because year over year and quarter over quarter, Microsoft continues to perform and continues to make money. So this big red candle says buy to me, and anything under this mark, anything under 415, so call it like 425, because really it's going to be up here, which is like 440. Anything under 440 is a good buy. And so if you just acquire shares of Microsoft every Friday under $440, then plan to sell up here at $590. The return isn't quite as large for Microsoft. If we had an average of $440, then we're looking at what, 480, 520, 560 is 30%. So maybe somewhere between 30 and 40% return on Microsoft. But it's still something worth buying. Like, 30-40% is nothing to sneeze at, and it's just a third company that we can start acquiring. Plus, it's Microsoft. But you could say that about Amazon, or say that about Facebook as well. It's Amazon. Like, what are we talking about? So, there's just no reason not to buy this. And so, third company added to the shopping list, and then Netflix. We've been buying Facebook and we've been buying Netflix, and Netflix just continues to be a buy. Their earnings, this says 56 cents. Oh, that's because of the split. That makes more sense. I didn't know. I wondered why that was so low. So this would be $5.60. But the previous earnings doesn't reflect the 10-to-1 stock split that occurred right here. So if we went year over year and quarter over quarter, then regardless of the current news about Netflix and its acquisition of Warner Brothers, or its troublesome releases of go woke, go broke movies, whatever emotional distress is going on with Netflix and the general population, none of it really matters. Like, again, the specific detailed news of what is happening today means nothing to me, because it's Netflix. And back in 2022, they were making $2 a share, and then $3 and $3, and then the next year they made $2 and $5, $4, $5, and then they went $4, $6, $7, $5. And so now we're looking at 5, and it's probably going to be something like 5, 6, 8, something. I'm making up numbers, but that's their growth is predictable. It is sustainable. It continues to grow year over year and quarter over quarter, regardless of the public sentiment of Netflix and people's opinions on their types of movies that they're releasing. I don't really know another way to phrase it other than I don't care about the news. I care about whether they have an upwards trend, an upwards trajectory. They make money. They make money at a positive rate. They're not losing money. And that they grow as a company year over year and quarter over quarter. And so their earnings turned out well. Their earnings are better than January of last year and the January before that. And then we can't see it, but the January before that. So, there's nothing that concerns me about Netflix, and this is immediately a buy. And it was a buy after their previous earnings and back in November of last year. So it just continues to be a buy, and I'll continue to buy this on Fridays as well. We are looking for about $150 on Netflix, and whenever it starts to recover from here, it's going to try and recapture this median line on its standard deviation for where it historically trends. So it's going to try and recapture this at least, and we should see by July $136, and by January of next year $150, with that 150 mark being attainable and being realistic at any point after June. So all of these are kind of lined up for June, where we should be able to achieve that 150 mark, or the Microsoft mark, or the Facebook mark, or the Amazon mark by June. And whatever the June pricing is what we're shooting for at the end of the year. We're just trying to get it 6 months early. So we continue to buy Netflix. We add Microsoft to the shopping list. We continue to buy Facebook. If the price stays down, if it starts to pop up higher than, $700, if it pops up above that, then you really don't want to be buying it. You just want to carry whatever shares we had acquired, and we would just want to carry those upwards. And then we can talk about selling calls once we get to a certain price target, but that price target's going to be somewhere at, say $8.75 or something. Then we can talk about selling calls for that, because we've acquired at least 100 shares of this. Same with Netflix. I know that a lot of us have acquired at least 100 shares of Netflix, but we have to wait for this to come up. And once we get somewhere in the $130 range, we can start talking about selling calls off of Netflix. And then for now, we just acquire Microsoft and we acquire Amazon. So that's kind of the earnings recap, is that, some of these companies are still too high. Tesla did come down a little bit, but again, we want like 350 or below on Tesla to feel good about the price, to feel good about buying it. Because I want to feel really good about buying things, and I love Tesla. I like the company a lot, but this chart does not look like Microsoft's, right? Like this looks too good to say no. So then I just have to say no to Tesla. So at this time, it's going to be Amazon, it's going to be Facebook, it's going to be Microsoft, and it's going to be Netflix. And we just buy these every Friday for at least the next 12 weeks going into the next earnings, which is going to be in April. So yeah, that's kind of it.